Yo, what's going on, guys? Bexio back, and is Bitcoin collapsing? So we've had a little move down in price in Bitcoin recently, and that brings back everyone talking about it. But honestly, nothing really crazy happening. We can look at Bitcoin's price right here. We are still in this ascending channel here, so nothing's really changed. Haven't even touched the bottom yet. We've already known this $47,000 level was a massive level, lots of resistance. You see, we managed to get over it, got pushed back down, managed to get back over for a day, got pushed back down, and then ultimately rejected off of it, came down here, bounced very nicely off of 44,600-ish, and this is where we currently stand, 45,600-ish. So I think we're still in this ascending channel. We haven't seen it break out one way or another, so we could come down to this next day even is $44,000 for this bottom of the channel and see if we bounce off of that level. If we continue going down, we could see going down a little bit. I think we're seeing volume start to fall off a little bit. So in the short term, we might see it start to trend more down towards this 44,000 and even this next level of 42,500. But we also could see it go back up and re-challenge this $47,000 level, because looking at these shorts, they are not something that looks confident in shorting Bitcoin. So obviously Bitcoin price here, the shorts down almost 9% at 1527. So they have come down from 1800 to 1500, which is a big move down. But we haven't seen shorts explode up or longs explode up. So ultimately, what that would really mean is this price here is a healthy price, is nothing crazy. There's a lot of spot trading going on. There's not a lot of leverage being used. So that's a good thing. It just means maybe less volatility over the time, which we've seen. I mean, fluctuating a few $1,000s, like 45 to 47 down to 44, is pretty normal fluctuations for Bitcoin. But you get into leverage and stuff, then you might see the much bigger wicks, like 5,000 at a time and stuff. So we've seen it pretty mild so far. But this right here, 1527 in shorts, kind of tells me that there isn't much confidence in Bitcoin's price being pushed down more. And I mean, we can see this just from the shorts chart. This is August 12th. We're a peak of almost 2,600 Bitcoin short. And we see that just trend all the way down to where we are now, 1525. The short percent isn't even 4%. I mean, there's a lot of things that are showing that the price might not get pushed down all that much. I mean, like I said, I think we could see levels of retesting this like channel, which would be 44,000, or even if we go back down to 42,500 would be this next support line. And then those numbers, and then hopefully bouncing off of that. Ideally, we want to, if we come down to challenge this bottom line, bounce off of this and try and retake 47,000 off of some sort of momentum like that. So if we drop further, then obviously we're going to have more things to retake. But these levels, 44,200 and 44,600, these levels aren't like super resistant like this 47,000 is, where we see, I mean, we've been stuck here for a while. These other ones, we kind of got stuck here at 42 and then ultimately came back down. We see it blast off. So we could see something like that where we challenge this line and blast off and try and get above the final resistance, which is 49,000, maybe 50,000. That'd be like the emotional level, and then into this just no resistance zone until 58,000. But looking at the fundamentals in Bitcoin, we do see exchanges are down 111,000 Bitcoin in the last 30 days. One of the sharpest drops of exchange inventories in Bitcoin's history. So you can see here, this is the history of Bitcoin. This goes back to 2012 on exchanges. Red is Bitcoin leaving exchanges. Green is Bitcoin going onto exchanges. And then obviously you see the price chart here in the gray line. Right now, when we saw prices, go really sky high into the 65K level, that's when we had massive exchanges having Bitcoin being drawn off from them. So that means Bitcoin going into cold storage, into personal wallets, to anything off of the exchange, and that goes on chain. So when you move it from an exchange to something else, you go what's called on chain. and that's when people can actually see it. If you don't move your Bitcoin from exchanges, you don't technically go on chain. But right now, we're seeing this flip. We saw, a huge influx when the price collapsed from 65K ish down to that 30K and fluctuated here. And now the price starting to jump back up. We see massive drawdowns, which is actually the third largest exchange net position in Bitcoin's history. So this is good news for Bitcoin. This shows like people are taking control of their Bitcoin. Maybe more institutions are getting involved because they're more likely to take the Bitcoin and move it onto their own cold storage supply or their own cold storage like thing. And because normal retailers, most of people just leave their Bitcoin on the exchange. They don't necessarily care about moving it and stuff. But more serious Bitcoiners or institutions will move it. So we're seeing this can show more adoption coming as well. And we all know this chart, the Bitcoin hash rate. This is a massive indicator for Bitcoin and the price and everything that's going on. Right now, I mean, we've seen this is recovering very nicely. It is taking off. We're over the lows of November 2020. Obviously, that's a great sign. And the next one will be to try and get over this low in April of 2021. 131 to where we're at 119. So we could get over that, in the next maybe a week or two. This does take a while to actually come back up, but we see this recovery happening, miners setting back up, the network doing what it does, and the hash rate is very correlated to what happens in the price. I mean, we see this huge decline in hash rate matches up with the huge decline in price. That's just what happens. But now we're seeing it recover and trend upward, and we're seeing the price recover and trend upward. So they're just very correlated for whatever reason. Obviously, the hash rate has to do with the network running, and it does include security and all of that stuff. So it's a good metric to go on, and we see it's doing very well now. I mean, just to compare that to the Bitcoin price, you see it was like this, the hash rate and Bitcoin price collapse. And then you see this reach the bottom. The hash rate started recovering a little bit earlier than the Bitcoin price, which is typical because it could be a leading indicator. But Bitcoin, the hash rate starts going back up. We see the price start rocket back up, rocket up again. And now we're at this point where you were seeing a little bit of resistance here, and the hash rate is continuing to go up. So if this is a leading indicator, then the price should continue to go up as well. But like I said, we could look into challenging, the bottom half or the bottom line of this ascending channel, 44,000, or even going down to this 42,500 before rocketing back up. But ultimately, we want to take this 47,000, get above it and concretely above it. This has been a massive level. The last resistance, 50K, and then it's going to be blast off time until basically 58K or new all-time highs. And to end this video off, we will go over Willy Woo's tweet here, which is something that I think is actually happening, and we're seeing this actually happen. So it says, in a macro cycle context, long-term investors are still climbing towards their peak accumulation, which marks bottoms. Early signs to me that the bull market may continue into 2022, and BTC is in the process of breaking free from the 4-year internal cycle from the halvings. This is great news because instead of what we have been seeing, which is the 4-year cycle, Bitcoin boom and skyrocket and then fall 80% and then trade into a bear market for 2-3 years, and then the halving comes and then boom, skyrocket, fall another 80%, trade 2 to 3 years, and the bear market, halving comes, and rinse and repeat. Now we could actually be seeing this change where Bitcoin, instead of having boom and bust cycles, it's just a slow grinding upward move while adoption takes place. And then I think with halvings, we'll still see big booms. So instead of seeing bust, which would be the bear markets, where it's 2 to 3 years, about a year or 2 years after the halving happens, we would see Bitcoin just continue to gradually move upwards, not really care. The adoption would be there, the usage would be there, and it wouldn't matter because people would be on the Bitcoin network regardless of what's happening with the halving. So breaking away from that cycle is a good thing, and that's why people calling for 80% drops could be wrong. And the two definitions of a super cycle for Bitcoin is that run up to $1 million very quickly would be a super cycle. It'd be like mass adoption immediately. or we see not really a bear market or not a bad bear market. I think we're going to see the latter super cycle where there's not really a bad bear market, where we don't drop 80% or 50% or anything like that, where we kind of just trade nicely, a slow grind up until the next halving, where you see more explosion because of demand staying the same and supply getting cut, and then you'll see demand go up and all this and FOMO and all that. But it's a good thing to break away from this cycle. That's going to do it for this video, guys. As always, don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.